This is a chart showing someone investing 20,000 naira at an average return of 15%. So the average money market gives about 15%. So after 5 years, you're having about 5.2 million. After 10 years, you're having about 26.2 million. After about 30 years, you're having about 111 million. And after about 40 years, you're having over 455 million. It is crazy. But the question now is, a lot of people give up maybe at the 3rd year or at the 4th year. A lot of us plays in the labor market. Only few number of people know that there are other markets that you can actually play in, which is the financial market or the capital market. So if you are only playing on the labor market, you're just exchanging your time for money. And of course, after a number of years, your body is going to get weaker, and that is not enough. So you now have to learn the knowledge of how you can be able to maximize, your active years and start investing early so you can be able to retire on the brand style. You need networking to be able to survive as far as the labor market is concerned. So you can start building your personal brand using platforms like LinkedIn. So depending on your niche, depending on your career path, you could start posting your work, you could start putting out your project. And of course, you can also use other social media platforms, but then the LinkedIn is more of the professional space. So let's say you have a skill, you have a business, you could use other social media like TikTok, like Facebook, and because you need visibility. Because the new currency now is visibility. You can't afford to be hidden. So self-employed now means you are still involved in the business. The difference between business and self-employment is in business, you've now created a system whereby your business can work effectively even when you are not actively involved. That is what we call a business. But when you are just the only maybe employee in that business, it therefore means you are still an employee, but the only difference between you and the 9 to 5 is that you can decide not to go out, but then you're not going to make money. So it's okay to be in this different quadrant, but you must transit from active income to passive income. Financial education is not going to be taught in the 4 walls of the university. And that is the reason why you will see an accountant, you will see an architect, you will see a medical doctor, you will see people who are educated but yet still struggle financially. And that's because they lack the financial education. And the financial education is not something you learn in the university, like I said earlier. So it's something you learn personally, either from reading financial books, either from listening to podcasts, either from attending webinars like this. So these are the ways you learn, you improve your financial education.
In as much as we are looking at finances and looking at financial education, we also know the fact that it is God that giveth power, according to Deuteronomy chapter 8, verse 18, that says we should remember the Lord our God, because it is He that giveth power to make wealth. This meeting this evening is vetted from the place of concern. After reviewing the Nigeria curriculum as a whole, I just felt that there is a need for a financial education. Most of what we have now is how to make money, but how to put this money to use in the right way becomes a very big issue. And I have a very good friend of mine, Mr. Samson Kolawole. We are childhood friends. Anytime I just look at our friendship, I see people of like minds that are working together. He's currently based in UK, and I really thank God for his life. I've learned a lot, and I felt those dishes that he has been giving to me on a personal note is not something that I should leave for myself. And that is why I feel it's very important for us to have this session. I would like to start with a word of prayer. So for the Christian faithfuls that is already with us, let us pray, and all the prayer will be accepted in Jesus' name. Our dear Lord, we thank you for this evening. Thank you for this gathering. It's not just a gathering of brethren, but it's a gathering that is acknowledging you, because you are the one that give power to make wealth and even the knowledge to multiply them. We invite into our midst and we ask that you take charge. Let your word come expressly to your people. Let there be impact after the end of this program in Jesus' name. Amen. All right. Mr. Sam Sikolaole will introduce himself properly so that if there's any of his portfolio I'm leaving out, definitely you will hear from him. Mr. Samson,
Okay. Good evening, everyone.
good evening, sir.
Yeah, thank you for having me. Uh, Let me just say a brief view about myself. And I want to first of all thank the organizers of this event. That's my friend Patrick. So, being a childhood friend for, I think, the last 25 years, I've known him since early 2000s. So that's far back when we're in primary schools. And I think since then, it's been a wonderful, friendship. And then together we organize this event tonight just to educate people about financial literacy. I discovered most of us, or most people, are educated but not financially. And of course, for you to succeed as far as life is concerned, one of the educations you need to have is the financial education. And tonight I'll be taking you on that journey on how you can be able to, build your financial literacy so you could be able to retire successfully. I'll be sharing my screen shortly. Just let me know when you can see my screen. I hope you all can see my screen.
Yes, sir. Yes, sir.
Okay.
Yes, we can see your screen.
It's okay. It's okay. Majority of the people joining tonight are going to be final year students. And of course, we also have people who have already graduated. So
I'm working.
I just want to, help most especially the final year students who are graduating now and, moving to the labor market, and also those who are already in the labor market, some of the opportunities we have so we can be able to maximize it as far as investment is concerned. So first of all, I'll be starting with the 4 dimensions of education. Majority of us know about academic education. The last 25, 30 years, most of us have been educated academically. Some of us, of course, have some level of spiritual education also, which is also, of course, if you are either a Christian or a Muslim, but a large, only a few number of people actually have the financial education. So I'll be taking my time to dwell more on the financial education aspect. So for the academic education, basically academic education just teaches you how to read, how to write, basically. But you need beyond academic education. You could have a BSc, you could have a master's, you could have a PhD, you could even be a professor. But if you don't have financial education, you're still going to struggle as far as life is concerned. And one funny thing is, financial education is not going to be taught in the 4 walls of the university, and that is the reason why you will see an accountant, you will see an architect, you will see a medical doctor, you will see people who are educated but yet still struggle financially, and that's because they lack the financial education. And the financial education is not something you learn in the university, like I said earlier. So it's something you learn personally, either from reading financial books, either from listening to podcasts, either from attending webinars like this. So these are the ways you learn, you improve your financial education. So I'm not going to dwell much on the spiritual education. And then, of course, the personal education, personal education, this is just going to expose you to your weakness, your strengths, your mindset, your philosophy, your communication, your leadership skills. So, but tonight we're going to dwell more on financial education. So now, why financial education? Why do we have to learn financial education? So financial education or financial literacy is the ability to understand and manage money effectively. So a lot of us will say Do I really need to learn financial education? Of course, money is just for you to make and spend. But then, if you continue living your life without having this consciousness of what financial education is, you're going to suffer. You just keep working and working and keep working for money. One of my mentors, Warren Buffett, says if you don't devise a means for how to make your money work for you, you're going to work for money all your life. And that's just a fact. So a lot of us plays in the labor market. Only few number of people know that there are other markets that you can actually play in, which is the financial market or the capital market. So if you are only playing on the labor market, you are just exchanging your time for money. And of course, after a number of years, your body is going to get weaker, and that is not enough. So you now have to learn the knowledge of how you can be able to maximize, your active years and start investing early so you can be able to retire on a grand style. Now, for those of us who are below 25, or let's say under 25, I want to count you so lucky having this kind of knowledge. But if you're above 25, it's not late. However, whenever you get the knowledge, that is when your money is already for you. So take advantage of what you're going to be learning tonight, and not just listening to it, but if you listen and you don't take action, you are not different from someone who doesn't have the knowledge. So what is going to make a difference between you and the next 5 years and the next 10 years or 20 years is the decision you decide to take after listening to this webinar. So listening to this webinar, of course, I'm going to motivate you, I'm going to excite you, but that's not enough. You still need to take some steps after listening to tonight's webinar. So there's a difference between income and wealth. A lot of people are confused between having higher income and equating it to wealth. High income is not the same as wealth. You can be a high income earner, you can be among the top 1%. If you don't create a system for your money to start working for you, you're going to struggle all your life. So, but there's this deception that comes with high income. A lot of people think because I have a high income, I'm living in my house, I have bonuses, I have my own official cars, and they mistake all that for, being successful, because one emergency can happen and you just be thrown off balance. So I'll be taking you through the wealth creation journey. So the wealth creation journey starts from income. A lot of us will actually start from this place, and where we are exchanging our time for money, where we are either working actively or passively. So at this stage, you're going to earn an income. So when you earn an income, one of the rules is savings. According to the richest man in Babylon, the first rule says whenever you earn an income, the first person you pay is yourself. But a lot of people don't even remember to pay themselves. When they earn an income, they pay their bills, they pay the rental bills, they pay their car loans, they pay a lot of people, but you are the one working so hard for this money, yet you forget to pay yourself. And some people mistake paying themselves as taking themselves out, eating good food, buying good clothes. Of course, it's part of it. You work so hard for your money, you still need to spoil yourself, but that's not enough. So you now need to consciously have this mindset that I need to save for the raining days. I need to save for a day whereby I won't be able to work anymore. I need to save and invest so that at a point in my life, I don't have to work for money anymore. We all see the current situation as far as the entire world is. Inflation is increasing. Prices of goods and commodities are increasing. And if I must be honest with you, it is going to keep increasing. So the only way you can save yourself out of this rat race is to consciously have this mindset of how do I now start to exchange, my time and start building assets that will begin to pay me for life. And sometimes a lot of people think they need to have a lot of money before you start your investment journey. No, you don't need to have a lot of money to start your investment journey. So it all depends on which of the asset classes you want to start your investment journey. Some asset classes, of course, requires you to have a huge amount of capital, while some other asset classes don't necessarily require you to have a huge amount of capital. So a lot of people don't have this knowledge, and that's the reason why they just feel, I don't think I will do it. I would think I'm going to do it when I start earning a good salary. I think I'll do it when I'll be comfortable. And if I must be honest with you, there's no time you're ever going to be comfortable. Because if you are waiting for the perfect moment for you to start investing, that perfect moment will never come. You are finishing as you are done with one problem, another one is coming. So you now have to have that consciousness that no matter what life throws at me, no matter what I'm earning, I must put something aside. So there are different principles. Some people use the 60-40 principle. Some use the 80-20 principle. So I'm not going to give you a particular principle. So we're all at different phases in our life. Some of us are married. Some of us are singles. Some of us have responsibility, maybe aged parent. So I understand it's not going to be easy for each and every one of us, to save the same amount of money. But at the same time, that is not an excuse. So the same way you have your monthly rental bills, your monthly car loan, the same way you put out money aside for your daily monthly expenses. So you now need to put out money consciously, that this money is also money that I'll be saving, money I'll be investing. So you have to treat your investment money, your savings money, as one of the mandatory bills as life is concerned. Because if you don't have that consciousness, by start treating your savings and investment as a bill, I can tell you for free, you will just see yourself working, and after 20 years and after 30 years, you'll just start asking yourself, I've worked the last 20 years, I've worked the last 30 years. So I've just been working and be paying bills. So the only thing you'll be left with is going to be memories. Memories of the good cars, memories of the traveling, memories and pictures. But those memories is not what's going to save you at retirement. So as we could see on the chart now, we have the income. So at this stage, you are earning your active income. From your active income, you save a portion. From your savings, you can now move to investment. So at this stage, you now start diversifying into different asset classes. Then from there, after a number of years, then you attain your financial freedom. Now I'll be differentiating between active income and passive income. So what is active income? Active incomes are incomes you earn through direct effort, skills, or time from your normal 9 to 5 is an active income. Any income that you have to be physically present to make that money is an active income. Each and every one of us is going to start from this place. Some might not start from active income. Some might start from passive income. Some might start from business. But a large majority of us is going to start from active income. And there's nothing wrong starting from an active income. There are a lot of people who are billionaires today, from active income. So you now need to leverage on how do I maximize my active income so I can start buying my time gradually to leave the rat race. Because even though you win the race, you are still a rat. Yes. So why leave your future in the hands of someone? Why not create a situation whereby you can wake up one morning and decide not to work? Because your passive income will start paying your bills. In year 2020, during the pandemic, a lot of people lost their job and nobody saw that coming. And it was one of the eye-opener to a lot of people that you cannot rely only on active income. So we don't know the next pandemic that is coming. It might come in the next 5 years. It might come in the next 10 years. It might even come next year. So how prepared are you for some of these life shockers that may come to us? So that is the reason why I'm taking you through this journey, so you can gradually start transiting yourself from an active income to a passive income. So passive incomes are money that you generate from your assets when you create a system. So that is passive income. It could be either from a rental income, it could be maybe your stocks, It could be maybe you sell a property. So any money you make that doesn't requires you to be actively involved, that is passive income. So as you could see, these are some of the examples of active income. Maybe you are an employee or you are self-employed. Self-employed in this case, you have your own business, but there's a difference between you being self-employed and having a business. So self-employed now means you are still involved in the business. The difference between business and self-employment is in business, you've now created a system whereby it can your business can work effectively even when you are not actively involved. That is what we call a business. But when you are just the only maybe employee in that business, it therefore means you are still an employee. But the only difference between you and the 9 to 5 is that you can decide not to go out, but then you are not going to make money. So it's okay to be in this different quadrant, but you must transit from active income to passive income. So these are some of the examples of the passive income where you could make money. It could be from dividend stocks, it could be from rental income, it could be from interest from fixed income investment, business ownership, intellectual properties. Maybe you write books, maybe you have a YouTube page, and so on and so forth. So I'm going to spend a lot of time at this place where I'll be differentiating the capital market and the fixed income market. Then before then, I'm still going to take you to the cash flow quadrant. So the cash flow quadrant, let me take my time to explain the cash flow quadrant, then I'll go back. So because you need to understand the cash flow quadrant. So this cash flow quadrant is an extract from Robert Kiyosaki. Robert Kiyosaki is the author of The Rich Dad and the Poor Dad. So that book is one of the best financial book I've ever read. And I haven't read that book the last 10 years. So it changes my mindset. It changes my philosophy as regards to money. So you could see we have 4 quadrants here. So we have the employee quadrant, we have the self-employed, we have the business owner, we have the investors quadrant. So if you are playing on the employee quadrant or the self-employed quadrant, you now need to transition to move into the investors quadrant. Yes, because your being in an employee quadrant may not give you that luxury of time to establish a business. But of course, while in the employee quadrant, you can always play in the investors quadrant, because the investors quadrant, you don't need much skill to play in the investors quadrant. You just need some basic skills and understand the different assets you could start investing. And one of the assets that is not luxury is time. So someone who starts investing when they are 25, another person starts their investment journey at 40. The person who started at 25 is going to retire with a lot of money. Why? Because of the power of compounding effects. And Albert Einstein says compound interest is one of the 8 wonders of the world. So I just want to encourage each and every one of us tonight, so we shouldn't play only on the employee quadrant. We should start thinking of how to transition to the investors quadrant. So back to understanding how the financial market works. There are 2 types of markets, basically. So we have the fixed income market, and we also have the capital or the equity market. So you can play in both markets, and at the same time, and you can decide to play on either the fixed income market or the capital market. So depending on your age, your risk profile, your investment philosophy, sometimes will determine which of the market you are going to play in. So for someone who is new to investment, I will advise maybe you start with the fixed income market. Why the fixed income market? Because the fixed income market, you don't need a lot of knowledge to play in the fixed income market. So the fixed income market, what are the different asset classes in the fixed income market? We have the money market funds, we have the treasury bills, we have the federal government bond, we have the commercial papers. So let me take my time to explain each of the different classes in the fixed income market. So the money market fund, as the name implies, are pool of funds whereby the investors can invest their money. So this money will be invested in assets that are low risk. When I say low risk, it could be in treasury bills, it could be in government bonds. So how do you invest in money markets? To invest in money markets, you now need to either use, we have different financial instruments, and we have different fund managers. It could be the ARM, it could be Stanbic Money Market. Stanbic IBTC is one of the most popular investment company as far as Nigeria is concerned. So, and they have different platforms you could leverage on each and every one of them. So the average money market fund currently gives around 15 to 19%. Actually, it mirrors the interest rate. So depending on what the interest rate as far as CBN is concerned is what the money market is going to reflect. So it's a low risk, but playing in the money market, if you want to grow your money, you don't have to play only in the fixed income market, because it is the capital market that is going to help your money to grow. But then, if you are a low risk investor, the money market is the best place to be. Then we'll have the treasury bills. So the treasury bills, they are short-term government securities. So basically between 3 months to 9 months, and the average return could be around maybe 17, 18%. So that's treasury bills for you. Then we'll have the federal government bond. So the federal government bond is being advertised every month, and it was introduced during the Buhari administration. So the federal government bond, basically, the idea was it was introduced by the government just to be able to raise capital so that they could be able to run capital projects. During the Buhari administration, the average bond was given a return of about 20%. Some were even given as high as 20, 22%. So currently now the bond is about 15%. So, but for you to enjoy the bond market, you need to invest a huge sum of money. Of course, the lowest capital you could start for the bond market is 5,000 naira. So, but for you to get a huge return, then you have to put a lot of money. For example, if you invest 30 million naira at 15% per annum, you could be getting close to about 1 million naira every quarter. So, and the way the bond works is the federal government bonds is going to be paid every quarter. So we have 4 quarters in a year. So after the first 3 months, you get your first coupon. After the next 3 months, you get your second coupon. So if you invest in the federal government bond for consistent 3 months, you successfully create a cash flow system for yourself. So what do I mean by cash flow system? So each of the coupons is going to overlap. The first 30 million you invested is going to give you 4 coupons. The next 30 million is going to give you another 4 coupons. The third 30 million is going to give you the third coupons. So now each installment is going to give you 4. So 4 times 3 is 12, and we'll have 12 months in a year. So investing in 3 consecutive months in the federal government bond, you've successfully created a cash flow system for yourself. So this is good for retirees, basically, especially people in their 50s or 60s. Let's say maybe they get their retirement money, their pension, or their gratuity, and they're like confused. What business can I do? And you don't know what to do. Let's say you get your gratuity of about 10 million naira. One of the safest places you could put it could be in the federal government bond. So you could split it into maybe 3, 4, 4 million in that order, and you split it into the government bonds. So at an average return of about 15%, so you'll be getting coupons every quarter. So your money could be there pending when you are thinking of what investment can I do, what business can I do. So instead of just leaving your money in the bank. So a lot of people leave their money in bank, and leaving your money in bank, your money is losing value. Of course, the banks will not tell you to remove your money because they want you to put the money there. So while your money is there, they're using your money, investing it on your behalf, but then you have little or no returns. Then we now have the commercial paper. So commercial paper are another kind of instrument. Basically, how the commercial paper works is you see corporate organizations, conglomerates like Dangote Refinery, Dangote Cement, and even some other companies like BUA and the likes of them. They issue out commercial paper time to time. The reason why they issue out commercial paper, it is cheaper for them to raise capital. So, but the reason why I won't advise you to invest in commercial paper, if it is not a company that has a good corporate governance, that has a good balance sheet, and that has been making profit consistently. So investing in their commercial paper might somehow be risky. But investing in a company like Dangote Cement, Boa Cement, Dangote Sugar, if companies like this, which you know are established and have been making profit consistently, issue out commercial paper, of course, it's okay. So the minimum investment in commercial paper is 5 million naira. So not everyone can invest in commercial paper, but the money market, the treasury bills, and the government bond is a good entry point for people with low risks and also for people who don't want to use the capital market. So instead of leaving your money in the bank, wasting, losing value, the best place to put it is money market. And the way money market works is so flexible, flexible in the sense that you could always withdraw your money within 48 hours. So it works like the normal bank account, but then your money is also generating interest, not just lying in the bank, whereby banks will remove charges. But when your money is in a money market fund, it's also generating money. So imagine you put 100 million in a money market fund at an average return of 15%. That's 15 million in a year. So if you didn't even add anything to the 100 million, that money is going to continue to compound. So let's move to the capital market or the equity market. So this is the best market to play in, but a lot of people don't know. Most people, because of the last 2008 stock market crash, a lot of people got their hands burned and they were so discouraged that the stock market is a scam, it's not real. But if you must build a long-lasting wealth, then you must play in the financial market. But for you to play in the financial market, you need to understand how the market works. You need to understand a lot of technicalities as regards, because you don't just invest in the capital market and just go and sleep. You need to belong to a community. You need to understand the rules of the game. So in the financial market, we also have stocks, we have equities. So stocks, equities can be used interchangeably. So the way the capital market works, you invest in shares of listed companies. So you invest in shares of listed company, and you can invest with as low as 5,000 naira. In fact, as low as 1,000 naira. There are certain stocks that are trading for as low as 1 naira. There are certain stocks that are even trading in kobo in the stock market. And we also have stocks that are trading for as high as 11,000 naira, the likes of Seplat. So the stock market is one of the best vehicles you can always use to build wealth, long-lasting wealth. So, some people call it paper assets. Not a lot of people can save money and buy land, but with 5,000 naira, you can start your journey in the capital market. So for you to invest in the capital market, you now need to understand some basic fundamentals. So when I say fundamentals, you need to understand what we call the fundamental analysis. If you want to become an investor, there's also what we call technical analysis if you want to become a trader, because there are two types of people in the market. Sometimes I could even call it three, because we have investors, we have traders, we have speculators. So investors are people who are investing for the long term. One of the greatest investors I know is Warren Buffett. Warren Buffett has been investing in the stock market for the last 70 years. We all know Femi Otedola, one of the billionaires in Nigeria. So he plays heavily in the capital market. Majority of his money, he made them from the capital market. Last year, December 31st, he closed his deal at Geregu Power after about 12 to 15 years investing in the company. So for you to make a lot of money in the market, then you need to be in the market for a very long period of time. That is when you see the power of compounding interest. So I will take my time and explain what a fundamental analysis is and what a technical analysis is, and how you can be able to maximize the both of them so you can be able to start your journey as far as your investment is concerned. So before you buy a stock, you need to understand the basics, which is what fundamental analysis. So fundamental analysis, now you are checking basic KPIs, key performance indicators, such as corporate governance. Corporate governance, now we are talking about the leadership of the company. How healthy is the leadership of the company? So, are some of the top directors, are they investing in the stocks? So it's like them passing a vote of confidence in the company. You could see Tony Elumelu of UBA Bank is one of the majority shareholders. And you could also see for Zenith Bank, the CEO, Mrs. Adora, she's also one of the majority shareholders. Last year, she bought about 500 million units of Zenith Bank. That is passing a vote of confidence that I believe in this company and I believe in. So seeing such kind of move, we call it elephant footprint. Because when you begin to see institutional investors taking position, there's something they are saying that retail investors are not seeing. Why did I say that? As an institutional investors, they could walk into the company and ask, what is the long-term plan? So there are certain information they could request. Okay, I have about 50 billion I want to invest in your company. Can you convince me why I should invest in your company? So there are certain information that they will be released to them that may not be released to the general public. So when you see certain moves as retail investors, seeing institutional investors taking positions quietly, so it's just showing you that this particular stocks, is going to do well. So I'm still talking on the fundamental analysis. I've talked about corporate governance. So the next thing you check the balance sheet. So balance sheet now, is the company making profit the last 5 years, the last 10 years? You check their debt to equity ratio. Then you check the price per earning ratio. Then you check earnings per share. Then you check the book value. Yes, you might not understand the whole of these terminologies I'm saying now, but when you consciously start showing interest with time and you join a community where they discuss all this, you begin to learn the knowledge, you begin to understand how it works. Two, you also look at the microeconomic factors under the fundamental analysis. So the microeconomic factors now has to do with factors within the organization, the leadership of the company, how healthy it is. Then you also look at the expansion. Are they expanding their tentacles outside the country? You could see a company like Dangote Cement currently is in 14 African countries. What an expansion. You could see companies like UBA, Zenith Banks, they are in majority of the African countries. This year, Zenith Bank was listed, opened a branch in Manchester. Hopefully by next year, they'll be listed in London stock market. Currently, GT Bank is listed in London stock market. Same with Seplat. So, and as I speak with you, Nigerian market has been placed as one of the frontier markets. And S&P in US and FTSE 100 in the UK, have placed Nigeria on their watch list. So this is a signal telling you that this is one of the best times for you to start taking positions as far as the market is concerned. In the month of June, that was one of the best entry time to enter the market because the market experienced a dip. And why did the market experience a dip? The market experienced a dip because there have been a run between January to May. So because the market doesn't trade on a straight line. So it goes up, it comes down, it goes up, it comes down. But on a long time, it's always going to increase. So I will be showing you some of the graph patterns in my subsequent slide. So back to technical analysis. So if you want to be a trader, you now need to understand technical analysis. So this is a chart of NACO, Nigerian Aviation Handling Company. So for you to be a trader, you now need to understand and study candlesticks. So these are what we call candlesticks. So, and we have different kind of candlesticks. We have the cup pattern, we have the M pattern. So it's a little bit technical. So and a lot of people play as a trader. I personally am an investor. I don't play as a trader, but you could also make money as a trader. But for you to make the real money, then you need to play as an investor. Of course, you can play both as a trader and as an investor, but the real money comes when you play as an investor. I'll be showing you some charts. This is for NACO. NACO in year 2020 was trading for as low as 2 naira. That was during COVID. And the reason why was because, of course, we all know what happened during COVID. So there were no movements. So Nigerian aviation handling companies, basically what they do is they cargo goods and services within and outside the country. So in year 2020, the stock was down. But even though the fundamentals of the company was still great, that was one of the best entry time. And a lot of people who took advantage of the stock as at year 2020, looking at, when you look at this chart here, in 2026, sometime in May, it was trading for as high as 220 naira. So something you bought for 2 naira, now trading for 220 naira. So let's say you bought 1 million units at 2 naira, that's 2 million naira. So now it is currently, it has a little bit dropped. Currently it's trading at 166. So now it is, as at May, it was trading as high as 220 naira. So something you bought for 2 million is now over 220 million after a space of about 5 to 6 years. Last year alone, NACO paid a dividend of about 6 naira per unit. So imagine you have 1 million units. Your 1 million units you bought in year 2020 for 2 million naira. In year 2025, you are getting a dividend of 6 naira per unit. So 6 naira multiplied by your 2 million. So you are getting a dividend that is even higher than the capital you invested in the first place. This is how people make money as far as the market is concerned. Now, this is Presco. I always talk about this company. In year 2020, Presco was trading for as low as 35 naira. Today, Presco is over 2,000 naira. So it is late to go into a company like Presco. I won't advise anybody to go and buy Presco now, even though the fundamentals are right. But it is late to go into Presco. So those who invested in Presco, I'm going to show you a chart. This is one of my mentors, Sola Adesakin. So Sola Adesakin is a finance coach. In year 2019, she bought Okomo for 67 naira. Today, Okomo is trading, as at May, it was trading for as high as this post was made in 2nd of March. You could see on the screen, 2nd of March. So as at 2nd of March, Okomo was trading for as 1,765 naira. And she bought it in 2019 at 67 naira. Now, let's say she bought 1 million units. That 1 million units is going to cost about 67 million. And in 2019, your 1 million units now multiplied by 1,765 naira. And the company has been paying dividend consistently. So these are the different ways you could make money as far as the stock market is concerned. This is a chart for TIP. TIP is the Initiate PLC. So I could call TIP a growth stock. As at 2 years ago, not too far, in 2024, TIP was trading for as low as 2 naira. As at the close of market today, TIP was trading for as high as, I think, 33 naira. And I can tell you for free, in the next 5 years, this company, 5 to 10 years, will be trading for close to maybe 200 or 250 naira. January this year, the public offer for TIP was 9 naira 50 kobo. That was the public offer. Then the right issue was 7 naira. I'm going to differentiate between public offer and rights issues. So public offer is companies time to time issue out public offer just to, for fresh investors, those who don't have the stocks already can key into it. So that is public offer. So most times the public offer sometimes might be trading at a price less than what the stock is trading on the floor of the exchange. Why the right issue is only for existing shareholders. It's just like the company saying, thank you for investing with us. So we just want to appreciate our existing investors so you can buy more share at a cheaper price. So we call it right issue. So if you don't have the stock in your portfolio, you can't participate in a right issue. Then we also have what we call bonus share or stock split. Sometimes you could hear a company will say 5 for 1 or 3 for 1. As at early this year, there's a stock called NGS Group. So NGS Group is more like the engine behind the stock market, basically. So for every trade or transaction, either you are buying or you are selling, NGS Group is making money. So NGS Group, as at early this year, was about 80 naira. As at the close of today, it is trading for about close to about 160, 170. And they announced a bonus share of I think 3 for 1 for existing shareholders. And early this week, they've already announced an interim dividend, and the price is already going up. So these are some of the ways you could make money as far as the Nigerian stock market is concerned. So you don't need to have all the knowledge. You don't need to wait to understand everything before you start investing in the market, because the more you are waiting, the more time is going, the more you are losing on the power of compounding interest. So beyond investing in the capital market, there's also what we call equity mutual fund. Not some people may say, okay, do I have to understand this chart? Do I need to, how do I begin to study this? This looks difficult. This is, yes, I know some of us may not really have the time, might be busy, I know life is lifing, but the same way you give attention to academic education, the same way you take, what do they call it, your relationship with God serious, which is your spiritual education, that is the same way you must consciously invest in your financial literacy. Because if you decide to leave it without taking it serious, I can tell you for free, you're going to pay for it. Because you're going to continue working and working and working and working for money instead of your money to start working for you. So for the equity mutual funds, you might say, okay, I don't want to invest in individual stocks because I don't have the time. I can't be studying fundamental analysis. I don't know how to study balance sheet. I don't know how to, do my research as regards to micro or macroeconomic factors. I just want the fund managers to do it for me. Then you can play in equity mutual fund. So in the equity mutual fund now, you invest in it, and the fund managers who are experts will now buy the shares on your behalf. The average return for equity mutual fund the last 5 years have been about 30 to 40%. So it mirrors the stock market. So if the stock market performs well, then equity mutual fund is going to perform well. So let's say you invest 5 million by January, and by December, let's say the market has done about 40%. So it means your 5 million has grown by over what? 40%. So you do the calculation, what 40% of 5 million naira is all about. Almost close to about 2.5 million. So now imagine you leave that money for the next 10 years, for the next 20 years. It will keep compounding and compounding and compounding and compounding. So we also have what we call index fund, ETFs. Sometimes some people might say investing in individual stocks might be risky. So I don't need to invest in individual stocks. Yeah, I understand. So some investment philosophy would tell you, pick a mutual fund or pick an index fund or pick an ETFs. So index fund, ETF could be used interchangeably. I hope I still have time. So when you are investing in ETF is what we call exchange traded funds. So it's like a basket of funds. Let's say you go to a supermarket now, and in a supermarket, there are different sections. There are some sections where they sell groceries. There are sections where they sell perfumes. There are sections where they sell clothes, So that is how the ETF works. So it's a basket of funds whereby you have stocks of similar businesses. For example, We have the ETF 30. The ETF 30 in the Nigerian stock market is the top 30 performing stocks with market capitalization of over 1 trillion naira. Then in the US market, we have what we call the S&P 500, which is the top 500 companies as far as the US is concerned. Then we have the NASDAQ 100, with the ticker symbol of QQQ, which is the top 100 tech companies. So instead of investing in individual stocks, some investment philosophy would tell you start with an ETFs. So I don't really do much of ETFs for the Nigerian stocks, but for the US market, I do ETFs. I'm going to tell you the reason why. So I see the US market to be a little bit more volatile than the Nigerian market. Why did I say so? The Nigerian market is highly regulated, especially the financial sector, the banking sector. So every quarter, not just the banking sector alone, every quarter, every company must declare their financial reports. When a company fails to declare their financial reports, they're going to pay a fine. And if it happens consistently, you could be delisted from the company because your financial report is your result that shows how healthy you are for investors to continue to invest. Two, there is an amount of shares that must be in float. I think about 20%. So even though some companies are not liquid, when I say liquid, when you try to buy them, they are not available on the floor market. And the reason is because about 95% of the stocks are being retained. Just 5% is in circulation. So such stocks are illiquid. So when you are buying a stock, you also need to do your research. Is this company liquid? So when I get in, can I easily get out? That's another thing you need to ask yourself. Then you also need to ask yourself, am I buying at the top? Am I buying at the bottom? So, because when you buy at the top, it is risky because the stock might pull back. So, and once it pulls back, you're going to experience loss in your investment. But if you're a long-term investor, you don't have to panic because for every pullback, it's just like you are driving a car. After some point, you accelerate, you're going to press your brake to slow down. You can't just be running and running and running and running. So the same way with the capital market, it works in a circle whereby currently we're in earnings season. So this earnings season now is second quarter. A lot of companies have been releasing their results. And once your result is good, the market is going to react positively to it. And once your result is bad, the market will also react positively by punishing you. So because investors are not sentiment, they don't have certain sentiment. Once you perform poorly, the market is going to punish you. Earlier this year, UBA fails to pay dividends, and Nigerian investors are dividend driven. Because of that, the stock price went down. Does that mean UBA is not a good stock? No. And because of the reforms and some of the policies announced by CBN, so they couldn't pay dividends. And it affected the stock price. And that was a good entry price for a lot of people to go into the market. So this is how the capital market actually works. So I've explained, this is a chart for NACO, this is a chart for Presco, and this is for T, basically. And then this is Solar Sakin, displaying success stories, how she bought Okobo in 2019 at 67 naira. Sometimes you might buy a stock and the stock might not move for months, for years. But one thing you need to ask yourself is, are the fundamentals right? If the fundamentals are right, then you just need to stay patient. Because one thing investment is going to do to you is it's going to build resilience, it's going to build patience in you. Sometimes a stock might not move much in 2-3 years. And when it starts moving, it moves with speed. The stock like Presco has been stagnated for a while, but between 2025 or 2024 and 2026, it has shoot up the roof. And every stock has its own time. So not all stock will move at the same time in your portfolio. So you just have to be patient when you start investing in stocks. So any money you are putting in stock should be money that It's not money for your rent. It's not money for your school fees. It's not money that you rush and go back and sell it. So any money you're investing in stock should be minimum of money you can live for at least 3 to 5 years, or a minimum of 1 to 2 years. It's not money you put in and say, let me do it for 3 months and remove it. So because you can't predict the market have a mind of its own. So building a financial foundation after graduation for the final year students who are on the call, basically, when you start working, you are earning. One of the things you need to do is to create a realistic budget. How much am I earning? How much do I need to spend? Then you build an emergency fund. What is an emergency fund? In fact, before you start your investment journey, you need to build an emergency fund. So an emergency fund is 3 to 6 months of your living expenses in a high yield savings account. That is an emergency fund. So I think I've spent more than my time. I'm going to round up quickly. So you start with an emergency fund. So an emergency fund, like I said earlier, is 3 to 6 months of your living expense in a high yield savings account, not in a normal bank account. Because if you leave it in a normal bank account, it is losing value. You put it in a high yield savings account like money market, that will be also generating interest for you. So after you build your emergency fund, you might not be able to build an emergency fund quickly. It might take you a year or two to build your emergency fund, but make sure you have an emergency fund. So your emergency fund is what's going to save you when there's emergency. So you don't have to go to touch your investment prematurely. So for the science student, it's just like what we call a buffer solution, basically. So it protects you when there's an emergency. So an emergency fund is not what you use to basically, maybe you borrow it to someone. No, it's money you keep. Let's say your car break down. There's there's an emergency. Maybe someone is in hospital. You just want to assist. Maybe your mom, your dad. That is what you use an emergency fund for. So you only use it for emergency, basically. Then avoid unnecessary consumer debt. I saw a post that was flying around, I think today. A lady said she borrowed money on one of the loan app, about 1.2 million naira. And guess what she used the money to do? She went and bought wig and what again? And she ended up deleting the app, thinking the debt would be cleared, only for her to re-download the app. And then she discovered the 1.2 million naira she borrowed is now over 9.6 million naira in debt. So some people invest money on luxury. Some people invest money in buying things they don't need. I'm not saying you shouldn't invest money on yourself to look good, of course. But before you start buying luxury, have you invested for your future? So that is one of the things you need to ask yourself. So when money comes into your hand, what are the first things you do? Do you buy liabilities or you buy an asset? So a lot of people, when money comes into their hand, the first thing they start thinking is buying liabilities, buying things to impress people that don't even care. So one of the things you begin to experience when you start your investment journey is going to build discipline in you. It's going to build, it's going to make you to be more focused, basically. So for you to be able to invest successfully, you need to avoid what we call lifestyle inflation. There's what we call the Parkinson principle. Parkinson principle states that when your income increases, your lifestyle is going to increase with it. So for you to be able to build wealth, you now need to work against the Parkinson's principle by living below your means, basically. So it might require you to sacrifice for like 5 years or 10 years. It might require you not to take a car finance loan. Most of us living in the Europe, there's what we call the credit system. So, and the way the credit system works, especially those of us from Africa, when we come to Europe and we see it as a free money, you can take a credit card, but any credit card you are taking, don't use a credit card to buy a consumer debt. You can take it and buy an asset that is appreciating in value. But a lot of people use credit card and they start buying liabilities. And over some time, the interest starts accumulating and you see a lot of people being overwhelmed with it. So Building an emergency fund, avoiding consumer debt, investing consistently, that is one way you can be able to escape the rat race. I've talked about the cash flow quadrant. Now, this is a chart showing someone investing 20,000 naira at an average return of 15%. So the average money market gives about 15%. So after 5 years, you're having about 5.2 million. After 10 years, you're having about 26.2 million. After about 30 years, you're having about 111 million. And after about 40 years, you're having over 455 million. It is crazy. But the question now is, a lot of people give up maybe at the third year or at the fourth year. Some people, yes, I know you might not be able to do 20,000 monthly, maybe as a student, or maybe you are earning minimum wage. So whatever amount you can start with, just make sure you are saving something consistently. And of course, there are people who can even do more than 20. There are people who can do 100,000. So now imagine you are saving 100,000 consistently. And you leave it for the next 30 years. Let's say you're a civil servant and you started working and you're going to work for the next 35 years. And you start on your first month, depending on what you are earning, let's say you're able to put 50,000 or 40 or 100,000. At your retirement, you should be having close to $500,000, apart from the money you're going to get as your pension or gratuity. Because one thing a lot of people don't know, pension and gratuity are not meant to make you rich. They are more like palliative. I see pension and gratuity as palliative, just to help you, but it's not really meant to make you rich. What is going to make you rich is your investment, is your assets. Finally, for the final year students on the call, I'll also be talking on networking, basically, and how you can also build a personal brand, because you need a personal brand. You need networking to be able to survive as far as the labor market is concerned. So you can start building your personal brand using platforms like LinkedIn. So depending on your niche, depending on your career path, you could start posting your work, you could start putting out your project. And of course, you can also use other social media platforms, but then the LinkedIn is more of the professional space. So let's say you have a skill, you have a business, you could use other social media like TikTok, like Facebook, and because you need visibility. Because the new currency now is visibility. You can't afford to be hidden, So one way you build a personal brand is by leveraging the power of social media, basically. For those who are professionals, you can start connecting with some of the people you see who are working in that industry you are looking forward to work into. So you can start posting either weekly or daily as time permits you. And after some time, you build consistency, you build a personal brand. So sometimes recruiters can even, connect with you, basically. And if it's for you, let's say you are posting your business, the type of business you are doing, on other social media platform, over some time, you build a reputation. People have seen this is what this person is doing. Whenever someone needs such a service, you'll be one of the first person they will connect with. So that is the power of networking and the power of personal branding. I think with this, I've come to the end of my presentation. Thank you once again for coming.
Right. Thank you, Mr. Samson. Thank you, Mr. Samson. I'm grateful for this information. It's actually timely for those that are just graduating, and also very, very much important for those that are still in school and those that are still working too. This is trying to point out that you can actually start making income regardless or irrespective of what point you are. I know at some point so many will be asking these terms that is being used, how do we decipher or understand them? One of those things I know is anything you put your mind into as interest, you'll be able to grow even personally on it. When it comes to stock markets, you can get paid through dividends. You can also get paid through capital appreciation. We have some questions here. I think someone, Mr. Omachi Ogaji, yes, asked a question. He said, "Thank you, sir. Thank you, Mr. Kolaole, for this lesson. Please, my question is, how can one determine the risk factors involved and the reliability for one in diving in stock market investment?"
Okay, thank you very much. How do one assess the risk factor? Well, there are no investment that doesn't have a risk. Let me start from there. Life itself is a risk. So, one of the ways for you not to get your hands burnt, I could remember when I started my journey, I was just so passionate on, you know, starting my investment journey. So, and of course, I've listened to a lot of finance experts, but when I started my journey, I think I did some mistakes. Some of the mistakes I did was I over diversify. Two, I bought at the wrong timing. So, one of the ways for you to avoid your hands getting burnt is to first of all get the knowledge. Two, joining a community. So one of the advantage of joining a community now is some people may not have the luxury of time to research some of these fundamentals analysis I talked about, and also some of the technical analysis, the microeconomic factors, the macroeconomic factors. But when you belong to a community whereby time to time they share some of this knowledge, you begin to learn, basically. Then two, to avoid your hands being burnt, you now make sure that for every stock you are buying, you need to check how healthy is the company. A stock like Zenith Bank, for example, Zenith Bank has been paying dividend consistently for the last 15 years. Unbroken. So that's a good stock to buy. But can you go and buy Zenith Bank now? I would say yes. Why? Because the stock just rallied. So we're expecting the quarter two result of Zenith Bank. And currently, Zenith Bank at the close of market today was trading for about 126 naira. But in June, in June, it was trading for as low as 100 naira. Yes, it was trading for as low as. So there was a lot of market correction in June, and a lot of new investors were scared. What is happening? The price is falling. Should I sell? Should I sell? So, because there's what we call FOMO, fear of missing out. So, as long as the fundamentals are solid, so even when a price of a stock is falling down, you don't have to sell, especially if you're an investor. But if you are a trader, then you are losing, because a trader is not investing for a long term. A trader is just hit and run, basically. So they study the chart pattern, and once there is a pullback, they take advantage, and they also sell once the price has gone up. So one way to avoid your hands being burnt is to make sure whatever stock you are buying, you do your homework very, very well by studying the fundamental if you're an investor, and also studying the technical analysis if you're a trader. So there are basic things. As a newbie, you may not be able to understand some of the terminologies I explained earlier, but then you could first of all check market capitalization. Stocks with over 1 trillion naira market capitalization, for example, are good stocks. It's telling you, I think the most capitalized stock in the Nigerian stock market is Dangote Cement. Next is MTN. But those stocks are so expensive, you need to have a deep pocket to buy them. So, and the stock market is like a bus stop. Once you miss a bus or a train, of course, there will be another bus. So now stocks like Zenith, GT have gone up. So the question you should ask, what are the next stock that can be like GT or Zenith in 5 years from now or 10 years from now? So that is the question you should be asking. So a stock like Jais Bank, currently, I see potential in Jais. I see potential in Wema. Even Fidelity currently is being undervalued. Same with UBE. The current price for UBA is about 47 naira. There was a time it was even trading for as low as 36, 37 naira. Whereas UBA should be in the same class with Zenith and GT. First Bank was also trading at about 40 something naira early this year, but the stock price has shot off the roof. Why? Because the second quarter result was fantastic, and the billionaire investor Femi Otedola currently increased his stake in First Bank. I think as at 2 days ago, he bought another 700 million units of First Bank. He bought when it was about 40 naira. He also bought when it was around 50 naira. Now he bought again at about 105 naira. So currently he owns about 21% of First Bank. So there is something he's seeing that we're not seeing. So, but I'm not going to tell you to go and buy First Bank now because you are buying at the top. So for your hands not to be burnt, you just need to do your fundamental analysis and you do your technical analysis if you're a trader. And if you're a speculator, speculators now, they're now checking what is the current trend. There could be a policy that is announced by the government and it could affect market price. It could be a reform. It could affect market price. I think I've done justice to that question.
Thank you very much, Mr. Sampson. We still have a question here. I don't know if you can see the chat box. If you can't see the chat box, okay. We have question from Tech Trend Innovation. He has 2 questions. He or she, rather, I don't even know which of the gender is it. But the first question is, what are platforms you could recommend for young graduates to invest in or buy shares or bonds on with minimal amount of money? That is the first question. I think you look into that recommendation of platforms.
Okay.
Should I take? Okay.
Okay. What is that? What is the second question?
The second question says, I now understand that stocks and shares are good investment opportunities, but what do you have to say about Web3 and cryptocurrency ecosystems, sir? Is there a way to compare both and then recommend which is better? Thank you.
Okay. For your first question, of course, there are so many platforms to start your investment journey. So we have some apps you could use to buy stocks, but I would rather recommend you use traditional brokers. The reason is because, of course, those apps are okay, but when you are using apps, you are paying more. Reason being that some of those apps, of course, they are licensed, but they are affiliated to traditional brokers. Take, for example, Bamboo. So Bamboo is one of the most popular app a lot of people use. So if you are buying a stock on Bamboo and I'm also buying a stock, let's say using a traditional broker like Atlas Portfolio, Afri Investor, or let's say Stanbic IBTC. So you might end up paying more. Why? Because when you are buying on that platform, those platforms are affiliated to the traditional broker. So they still need to come and buy from the traditional broker and they are there to make profit. So they will also add their own interest. So you end up paying more commission fee. That is one of the disadvantage of using the app. But of course, the apps are flexible. You could use them on your phone, your smartphones. Some of the traditional brokers, they don't really have an app. You need to, it's more like a web portal platform. So you need to access them on a laptop. So if you don't have your laptop, you might not be able to access some of the traditional brokers like Atlas Portfolio.
Yeah.
So now they both have their pros and cons actually. So of course, I'll recommend the traditional brokers because I personally use traditional brokers and I also use Afri investors. Then the second question was,
all right, sir. Can you just by virtue of just list those traditional brokers, just list them so that one could actually write them down?
Okay, we have over 150 brokers as far as the stock market is concerned. So I may not be able to list all of them.
But the top ones you recommend.
Okay, the top ones I could recommend, I would tell you, you can use Atlas Portfolio. You could use Morgan. There's Morgan Capital. You could also use Afri Investors. You could use Stanbic IBTC. Of course, some people use ARM, money market fund. They also have their platform. Then we also have United Capital. We also have Norobenga. So these are some of the platforms you could use actually.
All right. Thank you very much, sir.
So the next question was, what's my take on crypto? Well, crypto is a volatile space actually. So I don't play on crypto. And the reason is because even though I want to make money, I'm not desperate in making quick money. So, but if you want a quick money, crypto is one of the platforms, but you have to be very, very careful. That is what the only advice I'm going to give you about crypto. I'm not ruling out crypto. So crypto and Forex, in fact, Forex is more worse than crypto. So basically my investment philosophy, I use stock market is one of the vehicle I use in my investment. And of course, maybe real estate. So, but the problem with crypto is you could make a lot of money and you could also lose a lot of money. So of course, you could put some portion of your portfolio in crypto depending on your risk appetite. If you have a very high risk appetite, you can go for crypto. But the higher the risk, the higher the reward. So but depending on your age, that's another thing. So someone who is below 30, 40, you can play in crypto. But let's say somebody in their 50s or 60s, you can't take your retirement money and go and put in crypto. If that money goes, it goes for life. So, but stock markets, they are real businesses. You understand? So you can see the companies, you can walk into the companies. So it's not as if you are just buying numbers. You are buying real businesses. But in the case of crypto, I don't want to call crypto, it's just more like you buying coins, buying, speculating basically. So, and one of the problems with crypto is why it is volatile is there could be just one announcement in the international market and crypto price might crash. So currently cryptos is down. This is one of the best times to go into crypto, So you also need to be mindful of your entry point basically. So that's just my advice on crypto.
All right. Thank you. Thank you very much. I know we'll have more explanation on that. Someone asked, I think it was when you were talking about banks, asks that what of Access Bank, sir?
Well, Access Bank is, as far as Nigerian financial sector is concerned, Access Bank has the largest balance sheet. And they are the most, when it comes to rewarding shareholders, Access has not really done well. And that's the reason why the stock has been stagnated. Nigerian investors are dividend driven. So Access has bought so many banks in the past, the likes of Intercontinental, the likes of Sky Bank. So they keep one of their and Diamond Bank. So one of their investment philosophy is just buying assets. So you can't be buying assets and yet you are not rewarding shareholders. So in terms of balance sheet, Access Bank has a balance sheet of over 50 trillion naira. Yes, I know the stock is undervalued. I used to have the stock in my portfolio there, but I had to sell it off. Yes, because I don't attach sentiment to investment. Once you don't perform, I'm going to sell you off. So that was the reason why, of course, maybe someday, let's say one of the institutional investors like Femi Otedola decide to show interest in Access, the stock might experience a turnaround. So, but for now, I won't advise anybody to go and pick Access. Even though Access is among the fugas, when we say fugas, that is the top 5 as far as the banking sector is concerned. But in terms of rewarding shareholders, Access has not really done well, basically. So I won't advise anybody to buy Access Banks. My top banking stocks are Zenith, GT, UBA, or Fidelity.
What of Jai?
But of course, Jai. So, but don't forget, depending on your investment philosophy, you can't put all your money on the financial sector. So, depending on the capital you are playing with, if you are playing with a large capital, of course, you might have up to 4 banks in your portfolio. But if your capital is not much, you don't need to have more than 1 or 2 banks in your portfolio.
All right, thank you very much, sir. We have this question. The question is from Omachi Ogaji. He actually tried to point out that joining communities is very important, but his concern is that communities are not visible that means the communities are not visible. Then he now asks that what's your recommendation where these communities are not visible?
Okay. Communities are visible. So the only reason why you think communities are not visible is because you've not really searched for them. I could remember last year, I was so passionate that every day, I still do that up to now. I spend minimum of 1 hour on YouTube. What am I doing? I'm studying financial literacy. I'm studying the market. The same way I follow my academic back then during undergraduate and my MSc voraciously, that is the same energy I'm giving to investment, because schooling only makes you literate. It is your investment in literature that actually creates your actual future. So some people might say, how do I get community? How do I join? There are communities everywhere. So one way you join the communities, you see a lot of people creating content, financial content. You can start following their page. You could get stock recommendations from them. We have them on TikTok, we have them on Facebook, we have them on YouTube. You could just go to YouTube and type Nigerian stock market. You will see a lot of page recommendations. So from there, you can be following someone on YouTube. You've joined his community. He might be posting stock recommendations. So that was how I was able to stumble on my mentor, Wealth Coach Omiete, on one of his live platform. And stumble on that platform, it has actually changed, the way I see stock market, because I've learned a lot. But you're not going to learn enough from the live stream. You still need to invest your own time to go and dig deep and research. A lot of the things I say tonight, I had to do a lot of research. I had to study, before I was able to know them this way. So there are different ways you can search for communities. So I could recommend some communities for you. I could recommend some, finance experts or people who I know who give content on finance. One of the most popular, Wealth Coach Omiete, you could search him on Instagram, you could search him on YouTube, on Facebook, Wealth Coach Omiete. So he gives a lot of content, and every Monday, Wednesday, and Friday, he does livestock analysis where he analyzes the market. Wealth Coach Omiete is retired. I think he's around 46 now, and he retired at the age of 40, haven't been in the market for the last 28 years. So he started his investment journey at the age of 19 when he gained admission into the uni. This was far back 1998. And as far back as 2020, during COVID, he retired. He has a portfolio of close to about over ₦1 billion. So he didn't arrive there overnight. So when you have a portfolio of that kind of size and you are getting dividends in 5-10 million, you don't need 9 to 5 anymore, except you just want to do it for passion. So these are some of the ways you could join communities.
All right. Thank you very much, sir. You recommended Wealth Coach Omiete. If you take your time,
yeah, you could also
okay.
Yeah, you could also search for Investor Joe, but Investor Joe is more of a trader. So I don't really take all his content, because he's more of a trader. He's going to be advising you to sell, you understand? So, but because he does more of candlestick analysis, basically studying the chart pattern, that's Investor Joe. But Wealth Coach Omiete is more of an investor, and he has over 28 years experience in the market. Investor Joe has less than 10 years experience in the market. Then we also have Financial Jennifer. They're also there. So we also have so many finance content, on YouTube, on Facebook. Once you begin to follow one, you see there's a way the algorithm works. It will start recommending others for you. And if I open my Instagram, my YouTube, the only kind of content you see are finance content, because that's where I spend my time, basically. Because I want to retire early. I don't want to spend all my time doing 9 to 5. The same energy I face with academic is the same energy I'm using to chase my investment.
Yeah. Thank you very much. I think he had made some recommendation, and one of those things I know is some of these communities you have to pay for their services, but I deeply respect Wealth Coach Omiete. For the very first time he was I was introduced to him in his live section. That is Monday, Wednesday, and Friday in the afternoon, 12, right? Hope I'm correct, Mr. Sampson.
Yes.
12,
Yes.
12 p.m. You see people ask live questions, and he usually do live analysis on the spot. You do live analysis on the spot where you could get information on which particular stock to buy. You can even ask him, you have so amount of money, you want to make investment, what are his recommendation? Thank you very much. Don't forget, in the stock markets, for those that still cut across how can I invest, I believe that as time will permit us, we'll try as much as possible to see that we could come up with something that will focus on the stock market, how you could get registered, how you could start buying stocks, knowing what penny stocks are, what blue chip stocks are, and where to put your money. One of the most important lessons that you must pick today, if you did not pick any, is the fact that you have to be consistent in investment, because there's what they call the power of compounding. The analysis was made. You also have to understand that at the point you are, you can start investing. I deeply respect one of us that is here. We just got talking and I told the person that you can actually start investing. The person just called me to say, Mr. Patrick, I invested 5,000 naira, and within some couple of weeks, this 5,000 naira have grown to 9,000 naira. He just started. So it's one thing for you to hear, it's another to start. I appreciate you, Mr. Sampson. We might still call upon you once more, or as the need may arise, to give more education on how to buy stock. So that when one starts, introduction to other communities and the foreknowledge on how to go about buying stocks will help in putting all these things we've learned to practice. In the absence of other questions, talking about community, I think I will try as much as possible. For those that still have me on WhatsApp group, there is this group I created on CrocFix. You can actually throw your questions with regards to stocks or any other area of branding and networking you want to ask. You could throw your question on the platform. I'll share the link on my social media handle, the link to the WhatsApp group, so that if we can be of help at any point, we'll gladly do that. All right, Mr. Sampson, your closing remark before we call it a day.
It's okay. Thank you once again for having me. So I'm going to leave you all with this closing remark. You are born to look like your parents, but you are going to die based on your decisions you make. So the next 10 years, the next 5 years of your life is going to be determined whether you are taking your investment journey serious. And the best time to plant a tree was yesterday. Another best time is today. So the more you keep procrastinating, the more you are losing on the power of compounding effect. So I will encourage each and every one of us to start our investment journey. You don't need to understand A to Z. Like I said earlier, you could start with the lowest hanging fruit, which is the money market. So while you are there, you are building this consciousness, you are building this discipline. And from there, you start growing, you join communities, and you start learning. And before you know, you start building your portfolio from 20,000 to 50,000 to 100,000. And someday you just wake up and you see millions of naira in your account. So that is one way you can be able to build your portfolio and attain financial independence. A lot of our parents struggled financially. That was because they don't have some of the knowledge we are having today. So in this era, if you are not investing in the stock market, I'm afraid you are losing money on the table. Inflation is going to continue. Cost of living is going to continue. But the only way you could edge against all this is to take advantage of the stock market. And the Nigerian market is one of the best vehicles Nigeria is an emerging economy. Our population is still increasing. So, and then with some of the reforms, policies with this present administration, I can tell you a lot is going to happen. By September, Dangote refinery will be listed, and that is one of the major wealth transfer that is going to happen. Dangote refinery is about $50 billion and is listing about 10% of that in the stock market. He just completed the private placement, and over $2 billion was ingested in the private placement. So by September, the company is going to be listed, and once the company is listed, current now the market's cap of the entire market is over 150 trillion, about 156 trillion. So by the time Dangote refinery is listed, the market cap of the Nigerian stock market should be going to over 200 to 250 trillion. And I bet you the market, the refinery will also be listed in London stock market. So you could see the traffic is going to generate. So you could get your own share from that. You don't have to invest in the refinery. You could just find some valuable stocks and start. So I just want to encourage each and every one of us. This is how the wealthy play the game. You're not going to learn this in university. Nobody is going to teach you this. Most of you joining this webinar tonight are so lucky. You know, some places you pay money to learn some of these things, but we are doing everything tonight for free. So you are getting a gold. So I want to encourage each and every one of us, take advantage and start your investment journey. Take advantage and start your investment journey. Thank you once again for having me.
Thank you very much, sir. At this junction, we'll call it a good night. You can start building a generational wealth, because a good man will hand over wealth to his children. So don't be counted among those that your children might refer to as part of their generational curse, but rather be a blessing to your children. Thank you very much, sir. We are really, really grateful for your time. Have a good night.